Technical look at the markets. Katie Stockton, founder and managing partner at Fairlead Strategies. It wasn't long ago we talked to you, Katie, so it's still fresh in our mind what you said. Let's talk about what has changed just in the last couple of sessions. The oversold conditions, short term, are probably more pronounced at this point, which could normally be a good thing, more widespread. But you say until momentum changes, it doesn't even help, and that these type of oversold conditions can be sustained for a while.
That's right. So we look for oversold buy signals in uptrending markets, and yet in downtrending markets like we have now, the oversold readings really aren't necessarily a good thing. We do have a very extreme reading from measures like the percentage of stocks in the S&P 500 that are oversold, based on their daily stochastics for the technicians out there. And that is now around 90%. And it's just a reading we rarely ever see. So the first instinct is to react to that and say, well, an oversold bounce is likely. And it does certainly suggest that we'll see a rebound in the coming days. And yet that rebound, I think, would be very difficult to trade and, somewhat short-lived in the big scheme of things with this downtrend, still very much supported by negative momentum across time frames. We also had on Tuesday the most oversold extremes registered by the market internal measures that we track since the COVID pandemic low. And again, the inclination is to think that that's a positive. And yet, even at that low, those conditions had been maintained for about 3 weeks. And of course, we're in a worse environment now that is really something closer to 2008 in the way it sets up. In 2008, for one, the percentage of stocks above their 200-day moving averages got to 0. And it's currently around 18%. So oversold can obviously get more oversold.
We haven't seen any type of signal from the VIX that it's gotten to the point where the oversold condition would change to maybe a buy signal either.
That's right. So it doesn't show the capitulation as of yet. It does have upside momentum, supporting a test of resistance for the VIX, which is roughly 38. And if we were to see it clear that 38 hurdle, then that might be indicative of a capitulative spike from higher levels. But of course, with the inversely related S&P, that would mean we'd see another downdraft.
Yeah, I don't even want to give me an idea where the S&P would be to hit 38 on the VIX. You're talking some of your initial support at 3,500 and then even maybe better support at 3,200 on the S&P. That's where you'd perhaps see 38 on the VIX.
That's right. So I think 3,500 would certainly be enough to do it, just shaking people's confidence. What I've noticed from a bottom-up perspective is a lot of names, especially in the high-growth front, are still actually above their May lows. And I think that might be giving folks a sense of safety, like, okay, we don't have new breakdowns unfolding, but there's so many that are right on support that with even a day like today where the futures are down 1.5%, 2%, we could see these support levels taken out. So it's really very fragile, I would say. For the S&P 500, if we see 2 weekly closes below 38.15, that to us is a breakdown that would target that 3,200 level in the coming months with interim support around 3,500. So all of this kind of frames the downtrend, suggests that there's more downside risk, and to not get that false sense of safety from the oversold readings.
Same story with Bitcoin, 19.5, still looks like it's in the cards for you. And then I want to get on to the 10-year.
Yeah, that's next support, and it does look like it's in the cards. And Bitcoin has really outperformed Ether, and it's got a big base breakout in that ratio, Bitcoin to Ether. That suggests we'll see more of the same risk off in the cryptocurrency market. As per 10-year Treasury yields, they have cleared that 2018 high around 3.25 pretty decisively. And that breakout, if it is confirmed on that consecutive weekly closing basis in our work, it does put next resistance around 4%. So these are really meaningful moves that we're seeing.
Well, that sounds like the bond market's in the same state as oversold, but headed lower.
And the bond, it's really interesting. We're seeing from the DeMark indicators a lot of counter trend signals on the macro front. So bonds actually have buy signals. Yields, of course, have sell signals. The dollar has sell signals looking at the dollar index. So we still suspect that we'll get some digestion here, meaning sort of sideways choppy action from the likes of treasuries and also the dollar. And yet it hasn't manifested itself yet.